Good morning from Istanbul, Turkey. This is Atilla Yeşilada broadcasting for Real Turkey channel. Today I want to chat with you about the favorite Turkish pastime, which is trying to predict the value of the exchange rate, our beloved Turkish lira. Turks are gold bugs, they're also hard currency bugs, which is not unusual in a country where official inflation is 50%. It's certainly not unusual at all in a country where there is a concept of official inflation versus perceived or real inflation. Nothing is what it seems in Turkey. I'm slightly deviating my schedule in the comment section of my last video, whether Erdogan can steal the elections. I promised to do a piece on whether Turkish banking system is safe and sound, but that's now delayed to a later broadcast simply because the topic of what will happen to the exchange rate after dual elections on May 14th has become headlines in the Turkish press. Now, there is a consensus that the current exchange rate cannot be maintained after the elections, by which I mean the exchange rate in Turkey is not determined by the free buying and selling of, traders, importers, exporters, fund managers, banks, and the people at large, but by the central bank. It's almost as if Turkish lira is pegged at an artificial value against the American dollar. We call that an implicit peg. Once again, a procedure that's unique to Turkey. The central bank knows that if the value of the exchange rate is to be determined by the market, it could depreciate rapidly, and Turks simply blame their politicians when their beloved Turkish lira loses value significantly. There is certainly a truth in this assessment by the central bank, because usually to defend a currency, the central bank keeps interest rates high. That's certainly not the case in Turkey, where, as I've said, official inflation rate, which will be announced today, Monday, for 3rd of April, as 51%, but the central bank's main policy rate is 8.5%. Now, the debate has become heated not only because elections are approaching, but also there are a slew of reports which suggest that both Turkish economists and international experts believe Turkish lira is set to depreciate rather significantly after the elections, regardless of whether Mr. Erdogan and his allies win or whether his main opponent, Mr. Kemal Kılıçdaroğlu, and his Nation Alliance wins. Now, I don't agree with this viewpoint. Obviously, there is going to be massive turbulence around elections and possibly for a few days after the elections, but essentially the path of the Turkish lira depends on which side wins. In other words, Turkish lira will go in one direction if Mr. Erdogan wins once again, in another if Mr. Kemal Kılıçdaroğlu and his Nation Alliance win. Let's begin, shall we? Well, how did this debate start? As I've said, the value of the Turkish lira is no longer being determined by the free market, and it should be, because according to laws, customs, conventions, Turkish lira has a free capital account. That's both foreigners and citizens of Turkey, companies can buy and sell, hold foreign exchange freely, with no restrictions. Obviously, this has not been the case. As I've said, the central bank knows that when the Turkish lira depreciates, people blame it on their politicians because they all get poor. Furthermore, in most countries where inflation is rising, the central bank responds by raising interest rates. In some sense, a weak currency and higher interest rates are the enemy of each other. If interest rates rise, ceteris paribus, a currency appreciates, and if a currency is depreciating too fast, then central banks raise interest rates. This is not possible in Turkey because Mr. Erdogan firmly believes the opposite is true, i.e., Mr. Erdogan is probably the only one on this planet, believes that to reduce inflation, we must further lower interest rates. This is sort of like the most popular medical treatment in medieval ages, which is bloodletting, even if the patient is suffering from anemia. But that's another topic. Moreover, central bank is showing symptoms of panic over the last few months, changing regulations almost every day to make it more difficult for banks to sell currency to both companies and individuals, while the Treasury and the Office of the Presidency keep issuing these new rules, which incentivize Turkish people and companies to hold Turkish liras versus the dollar. For instance, another curiosity, while central bank's interest rate is 8.5%, if you have a substantial deposit, say over 1 million lira, the annual deposit rate is 30%. So, they're like a set of parallel interest rates. And as the central bank is wasting FX reserves to maintain the value of the Turkish lira almost fixed against the dollar, of course, people are asking the question why. The answer is simple. Turkey has this growing current account deficit. It's unlikely to decline in the coming months, and there is really no foreign loans or financial investment coming from abroad to finance this current account deficit, i.e., if the outflows of hard currency are bigger than inflows, then the difference must be compensated by either FX holdings of the private sector or the public, in which case happens to be the central bank. So, there's a good case to be made that the value of the Turkish lira is not where it should be, but where should it be? This is where the argument starts. I think the opening salvo was made by, let me find it here, by Bank of America. This is the cover of a 14-page research piece by Bank of America analysts, most of whom I know through their publications, excellent people. And the title is Elections in May, is Turkey Heading Toward Orthodoxy? If you look at the last subsection, Brace for Volatility, Bank of America makes a very strong argument that regardless of which camp wins, Turkish lira is overvalued, its current exchange rate against the dollar cannot be sustained, and Turkish lira must depreciate anywhere between 15 and 25%. Then came this article by Bloomberg, which really heated the debate. Turkey is shunned by emerging market hedge funds before vote. No brainer, really. No spoilers there. Everybody who can, including her own citizens, have left Turkey. Much less so than foreign investors. I'm going to provide the link to this article at the bottom of this YouTube video, but if you read it, Bloomberg has also interviewed a lot of noteworthy hedge funds that specialize in emerging markets, and the majority view seems to be really Turkish lira is way overvalued, it's too expensive, it's too dear, we're not gonna buy it. Several figures, exchange rate forecasts have been bandied around in the article, anywhere from 24 to 25 liras, and then, the situation goes on with news analysis by Xinhua, which cites Goldman Sachs article, which also claims Turkish lira is overvalued, as well as voicing the opinions of several Turkish economists which agree with the previously articulated view that Turkish lira must depreciate no matter what, no matter which side wins the elections. Now, I don't agree with that, to be perfectly honest with you. In fact, I'm gonna sort of tongue-in-cheek propose exactly the opposite. I don't think Turkish lira is going to lose value after all, no matter which side wins. Now, you gotta admit, if you have been a regular follower of this YouTube channel, that's really strange and radical from me, who has committed the sin of shooting at least a dozen videos about Turkey's impending economic or currency crises. Why have I changed my views? Let me express this in the context of the elections, and let's simplify the scenarios. In one scenario, Mr. Erdogan wins the presidency and his political constellation called the Republic or the Republican Alliance retains control of Turkey's parliament. And in the second scenario, his main rival, Mr. Kemal Kılıçdaroğlu, wins the presidency, and his political coalition, consisting of 6 parties called the National Alliance, also gains control of the parliament from AKP and MHP. You can find out more about Kemal Kılıçdaroğlu in the video. I think he's going to win the presidency. But I don't think the majority of Turkish pundits agree with me. There is this pervasive sense of defeatism which says that Erdogan will find a way to win. Fine. This is not the point of this video. So let's try to understand what will happen to the value of the Turkish lira if Mr. Erdogan wins again. Now, he is the spiritual leader of the Turkey's new economy model, which tries to stimulate growth and fixed investments and employment by constantly lowering interest rates, regardless of where inflation and current account deficit goes. If he wins the election, he will have received a mandate from the people to continue with this policy. There is no reason for him to change his views. Therefore, growth will be emphasized, inflation will be ignored or controlled by suppressing the value of the Turkish lira. Now, over the summer, this policy is sustainable simply because the team of economists I work with expect Turkey to generate annual tourism revenue of roughly $50 billion, give and take a couple of billion, which means that current account deficits will largely disappear over the summer months. And in fact, if for other reasons the economy slows a little bit, Turkey may even generate a surplus of foreign currency in summer months. So while unforeseen shocks, such as, Mr. Erdogan retiring suddenly, or God forbid, another earthquake, may change these scenarios by precipitating a run on hard currency, it's fair to say Mr. Erdogan wins, nothing will happen to the Turkish lira. But in the winter, the situation is completely different. That's when tourist revenues diminish almost to zero. The energy bill increases simply because people consume more. Turkey has borrowed a lot from Mr. Putin and Saudi Arabia. These funds need to be returned. And most importantly, as I've said, Erdogan has no interest in increasing the interest rate. In that scenario, Turkey is going to crash and burn. If central bank can't control the exchange rate, dollar may appreciate against Turkish lira from the current value of roughly 19.2 to 25, 30, 40, simply because there is no reserves at the central bank to defend any value of the Turkish lira. There is not that much foreign investment in Turkey, but Turkish people hold $190 billion in hard currencies and another $70 billion or so in what we call FX protected deposit scheme, which are TL deposits denominated in dollars or euros. If they pull out of their money out of this FX protected deposit scheme and want hard currency, or if they pull their dollars, euros out of the banking system, central bank simply doesn't have the cash or the resources to cover these demands. And if you can't pay people's deposits, well done, bank defaults start, and at some point, Turkey declares insolvency. That's a balance of payments crisis. But even in this rather pessimistic scenario, Turkish lira will not crash, simply because, as many other countries have done in the near past, the presidency will simply close the capital account. In other words, the presidency will forbid people to transact in hard currencies. Only central bank will be able to transact in currency. This is sort of very similar to the system in China now. We call this capital controls, restrictions on foreign currency transactions or foreign currency holdings. And there will be an artificial exchange rate set by the central bank, defended not by central bank intervention in the currency market, but by simply forbidding people from buying and selling hard currency. Now, how long that can last, I really don't know. At some point, if you have a constant deficit in your external account, you're going to burn. There's no doubt about it. But what will happen is not that Turkish lira will drop to 20, 25, 30 against the dollar, but there will be several exchange rates. There will be an official exchange rate, which is preserved for the importers, for those who definitely need to send money abroad, for governments, foreign currency expenditures, etc., etc. And then there will be a black market or parallel exchange rate, as is the case in Lebanon, in Argentina, I believe, and several other countries, which could go anywhere. Now let's move to the other scenario where Mr. Kemal Kılıçdaroğlu wins and his National Alliance captures a majority in the parliament. They've already announced in broad detail what they're planning to do with the economy, and the first thing they're going to do is change the central bank governor and confirm or affirm the independence of monetary policy from the government. This is really a polite way of saying, without annoying the waters, that they will appoint a guy or a gal who will raise interest rates. And when you raise interest rates, usually the currency appreciates. There are several reasons for that. The first is the rise in interest rates reduce domestic demand. And when domestic demand is lower, demand for hard currency is lower simply because you don't import that much. Additionally, when domestic demand declines, a lot of companies that used to serve the domestic market switch to export market, not to go bankrupt. Also, if you offer people higher Turkish lira interest rates and the prospect of a stable currency, then they don't want to buy foreign exchange. In fact, if you have a credible monetary policy that promises high interest rate as long as there is an inflation problem, as it had happened in the past in Turkey, many people would simply convert their hard currency savings to Turkish lira, which would also boost central bank coffers. More importantly, then this is substantiated by articles by Reuters and Bloomberg. If the opposition wins and adopts sane, rational, reasonable economic policies, foreign investment will return to Turkey, and Turkish banks and corporates will be able to borrow more in hard currency terms abroad. In other words, suddenly the amount of hard currency in the country will exceed the outflows through the current account deficits. And obviously, if the supply of something goes up, when demand stays stable, the price goes down. So the price of the price of dollars goes down, Turkish lira appreciates. But the most important argument about Turkish lira not needing to depreciate if National Alliance comes to power and adopts credible policies is the fact that, economically speaking, it's not overvalued. And I'm going to show this graph by the team of economists I work with, Global Source Partners Turkey. Our Turkish brand name is Turkey Data Monitor. This draws the real effective exchange rate of Turkish lira against several different criteria. That's CPI of developed countries, which are our main trading partners, and assuming CPI is not a realistic reflection of the inflation, we take CPI plus PPI and average it. And for the economists among you, we also look at the value of the Turkish lira based on unit labor costs. And look at these. Turkish lira has been overvalued much more in 2010, 2011. In fact, if we ignore the past year, it's fairly easy to see from this chart that the Turkish lira is actually undervalued, that Turkey's current account problem doesn't have much to do with the exchange rate. It has something to do with the fact that our interest rates are too low, given inflation and given heated domestic demand. If you correct for those, if you raise interest rates, which would slow down domestic demand, then lira doesn't have to depreciate. You can add to that belt-tightening measures in terms of fiscal spending, some rationalization of spending, and voila, Bob is your uncle, or Babette is your aunt, to be evoked. So essentially, there is really no reason for Turkish lira to depreciate if Kemal Kılıçdaroğlu comes to power. There is no reason. There are many reasons for Turkish lira to depreciate massively if Erdogan stays in power, but that's not going to happen simply because he's going to forbid foreign currency transactions. So no matter what, Turkish lira is not going to depreciate. Well, thank you very much for watching Real Turkey channel presented by Atilla Yeşilara. If you like it, subscribe or click the like button so we can receive more traffic. And see you in our next video. This is Atilla Yeşilara saying goodbye from Istanbul.